Hello, good morning and welcome. You've tuned into ET Now, and this is Buy Now, Sell Now with me, Varun Hirimat, and along with me, Karunya Rao. She'll be with us in just a second, but till then, let's take a look at the markets and see how we're faring. It's pretty typical of what we've been seeing every day. We're currently in the dip phase, so we always start out quite strong. We then dip throughout the midsection of the day, and then when 2 o'clock comes around, we tend to turn around, and the dip gets aggressively bought into. So currently, we're definitely dipping. The breadth is not in favor. We have 36 of the 50 Nifty stocks declining. The benchmark is currently down 0.6%. And even the midcaps today taking it on the chin. However, I must highlight that the small cap and mid-cap index are definitely faring a lot better than the lead benchmark. So Nifty is definitely the worst performer. The VIX has shot up slightly today. Also, in terms of some select indexes which are standing out, the media index, I haven't seen this one being negative for a few days. It's 0.8% down today. We also have the pharma index cooling off a bit. Nifty Pharma 1% down. The PSU banks as well, which have been top performers lately, they're taking a bit of a breather today. Of course, the private banks and in the financial services index continue to slide. But however, you do have certain stocks which are outperforming, right? So you had a Bajaj Finance, which was making a bit of a comeback today. In terms of the other top gainers on the Nifty, Bharti today leading the pack, post those MSCI inflows, 4% higher nearly for Bharti. UPL 520 back on the cards, very quick rebound from 430, 440 levels. HDFC Life today up over 1%, and then we have GAIL and Tata Steel as well. Two commodity-linked stocks that are doing quite well in trade. On the losing side, we have a major two-wheeler, Hero Motor down over 2%, Hindalco down over 2%. HDFC today Limited taking a bit of a breather, down 2%, and then BPCL and Kotak also taking a bit of a breather today. So the breadth currently isn't favoring the bulls, but let's see if the last few days is any indication of what happens. The latter half of the trading session always gets a lot more upbeat, so we'll keep a lookout for that. I think it's time to talk technicals and fundamentals with our guests who are with us, Kunal Bothra and Sharmila Joshi. Good morning, and thank you both for taking out the time to chat with us. Kunal, coming to you first, do you think this day is going to wind up like all the rest, where we're going to see us climbing back towards the high at the session close? Or do you think finally we're going to consolidate for a bit? And also, what are your high risk and low risk calls?
So interesting question, Varun. So good morning, first of all. Difficult to say how the markets would pan out, but one thing is for sure that we are consolidating. And I think if we consolidate, if we go through a time correction, that itself could be good enough. I would say victory for bulls as well, because the indicators get back into a cool-off zone. So I think that's the best part about consolidation. So I think that's the important highlight. Now, two buy calls which I would want to suggest. First one is a BAN SPI. Now, interestingly, the stock is on the verge of a breakout. Off the daily charts, would suggest a BAN SPI for a target of almost 325 to 330, 325 to 330 range. Stop loss could be kept at 300 mark, and I would expect PSU banking stocks to continue momentum. The second would be a BAN Reliance Industries. Now, I understand that the stock has underperformed, but when you look at comparatively, Idea is at a multi-month high. Bharti Airtel is almost at a multi-year high for itself. So I think it should be ripe enough time for Reliance Industries as well, which can participate on the upside from current levels. So the risk reward, the sector trend is in favor for Reliance Industries. Stock price to try and move up higher and inch up higher from current levels. So would suggest a buy in the anticipation of an up move. Targets of 2025, stop loss 1930.
Okay. Sharmila, hi, morning. What are your stock ideas for our viewers?
Oh yeah, so the sort of high risk idea that I'm going with is Jindal Steel and Power JSPL, and I think that this year is going to be a very good year for commodities as a whole, and we've already seen metal prices sort of take it away in this rally, and we've seen most of the metal plays participate in the rally, and so I think the only concern is that this has been a global rally, and we need to see that continue, and all the indicators, whether it's from China or elsewhere, do seem to suggest that the metal rally is here to stay. So it is high risk in that sense, but I do have confidence that, as I said, that the global rally in metals is going to continue. So Jindal Steel and Power, it would be it's a longer term buy, but the target would be closer to 340. The idea that I'm going with, which to my mind is low risk, is Sun Pharma. Again, I think that 2021. The two sectors that I think are really going to lead from the front are IT and pharma. IT has already proved its mettle with the kind of numbers that they've delivered, best ever numbers that you've seen ever sort of, for IT, and the stocks prices speak for that. Pharma, I think the rally is going to be slightly sort of slow, but it's at the same time, it has a lot of headroom still left because we are really recovering from multi-year lows. And also, I think the pandemic has provided a lot of these companies a great opportunity to provide low-cost medicines, etc. And I think that is, again, a strategy that's going to play out for them in 2021. Sun Pharma already, I think, is delivering fairly good numbers based on the fact that they shifted their focus to specialty chemicals, and now you're seeing that pay off in their numbers. So Sun Pharma with a target of 700.
Okay, thanks for that. Request the both of you to stay on with us. We're slipping into a break here, but when we come back, we'll address our viewer queries and get you more market insights. Stay tuned.
Hi, welcome back to Buy Now, Sell Now. Of course, the fourth IT heavyweight HCL Tech submitted its numbers this morning, and they were on many counts a beat. This now joins TCS, Wipro and Infosys as all having delivered a very strong set of results that beat street expectations and analyst expectations as well. So in light of this, Chandra R. Shrikant VT now had a conversation with the management of HCL Tech, particularly the CEO. Let's listen into a slice of that conversation.
We crossed $10 billion milestone. It's a momentous milestone in our journey, and I want to thank all our employees, partners, and all our clients for the tremendous confidence and trust that they've had in us. So it's a great occasion and a tremendous milestone, and we are very, very happy. On a 12-month basis in calendar year 20, we crossed $10 billion. Again, the year has started on a very good note. As you would see, our revenues constant currency 3.5%. 4.4% in US dollar. Our EBIT came in at 22.9%. It's again 130 basis points higher than the previous quarter. What is most significant about this quarter was our Mode 2 and Mode 3 businesses are really firing on all cylinders. Our Mode 2 business grew 10.9% quarter on quarter and 25% year on year. This is largely led by digital transformation programs, cloud migration, security, IoT, all the new things where we took some strategic bets and made significant investments in the last few years are really now coming to a great, contributing to the great momentum. The second, products and platform, the stellar performance this quarter, almost an 8% quarter on quarter increase and 9% year-on-year increase. And this is, there is very few businesses. In fact, I can't think of anything in our peer group which is growing on a year-on-year basis at 8 or 9%. That's because of, we've made some strategic bets in investing in IP. Those products are becoming a lot more relevant in the pandemic world, whether it is commerce, whether it is security, whether it is low-code, no-code platforms. All of them are seeing great traction. We won about 700 customers for our software product business. And the TCV that we closed is 3 times the TCV that we did in the December quarter of 2019. So it's a huge momentum in the product business. And we feel fairly vindicated, though there was a little bit of skepticism from certain pockets. Last 6 months has really proved that it's a very robust business, and we feel pretty confident. We signed 13 transformational deals.
That's right, 13.
Yeah. We define it by, earlier we used to have a slightly lower threshold, but this time we've taken a threshold of $25 million and above. And these deals would involve not just about, some of the rate card based deals, even though they're much larger, we don't consider these are transformation projects where we have a signed commitment. There is a clear outcome and transformation that's part of the deal. Our overall bookings is about 13% higher than the last year, same quarter. And our pipeline is very strong. We think the booking momentum will only accelerate from here. So all fronts very positive. We continue to feel very excited about this momentum. and the journey really continues on a very strong footing.
Right. I'm going to come to the products business in a bit, because as you said, there was a skepticism on whether the momentum here will last, the resilience of this particular business. But CVK, I also want to ask you about the deals in the market, because in the last year, we have seen these billion-dollar deals come back, particularly from continental Europe. The nature of deals is also changing. So, you are kind of buying out captives, rebadging employees, getting a contract as part of that. What opportunities do you see here in terms of these mega deals that are coming back in the market?
Yeah, I mean, I talked about it in the last couple of quarters as well. Two broad contours of deals. One is around bringing in more efficiency, vendor consolidation, cost optimization. That's one type of deals. The second one is really investing into the growth and digital transformation and cloud migration and long-term kind of right investments to enhance customer experience, enhance new business models, revenue streams. These are the two types of deals. And last quarter, particularly, we saw a lot more traction in the second type of deals on the digital transformation. And that's why you will see that we have a 10% growth in a quarter-on-quarter basis and almost 25% growth year-on-year basis in our Mode 2 services. And continental Europe continues to be a very promising region for us. We also did a very strong deal activity in the region in the last quarter. And this quarter continues to be very promising. Already we have started booking deals, and this quarter is very promising across the world, not just continental Europe.
So will you be looking at these kind of deals where you acquire and then kind of rebadge, or are discussions on, are more of these opportunities opening up? Because I think global companies kind of bring in efficiencies.
Chandra, we were one of the pioneers in doing large IT outsourcing deals. I mean, several years back, we had announced Volvo, which was one of the most transformational and large programs. And I mean, we have done this well. We can handle very large transformational deals. So now that's further accentuated by a lot of digital transformation and cloud migration work. We built a very strong ecosystem of hyperscalers, partnership with hyperscalers. In fact, we were again one of the earliest to set up dedicated business units for Google, Microsoft, AWS, IBM. So all of them are strong capability units which are feeding into some of the transformation programs. So we are definitely looking at all of these aspects as we pursue this big momentum in the industry.
Right. Prateek, coming to you, margins, of course, are one of the standout this quarter, 22.9%, way higher than what people were expecting. But for Q4, you have guided to 21 to 21.5%. So again, take us through what's happening here. Do you expect margins to perhaps come down with a vaccine rollout, more people traveling, working out of offices again? What other metrics can you possibly use?
Yeah, Chandra, thank you. You are absolutely right. 22.9% is a very gratifying number. Even better is the EBITDA number, which I prefer to look at because that is more closer to the cash generation of the business. And that number in Ind AS terms, IFRS terms, is actually at 29.1% for this quarter. And that is on top of the calendar year number being at 27.5% in EBITDA terms in Ind AS methodology. So Ind AS EBITDA 29.1% is helped by a lot of improvements in the business, the level of offshoring and all of that, and also takes into account the impact of the salary increments that we gave to the part of the population in this quarter. There are more increments lined up for a separate section in the next quarter, and that is all factored in. And, all the factors put together, we have increased our guidance. Last quarter, we said for the full year, we will be 20, in a range of 20 to 21. Now we have taken the upper end of that range to be now the bottom end of the range and increased it to 21 to 21.5. So I think that is reflecting the strong performance in the 9 months year to date, as well as what we expect as a range in the next quarter.
Right. But I think one aspect which the street is slightly disappointed with is your capital allocation policy. Some analysts feel that the blowout has been fair. People were hoping for some kind of announcement. What would you say to investors at this stage about your capital allocation policy?
I would like to remind our investors, shareholders, and analysts that, we are just looking for the best interest of all our shareholders, because as you know very well, Chandra, and everybody knows, the net takeout for the investor is better if the share price increases and capital gains taxation is lower, much lower compared to the tax that ultimately it goes out of the pocket of the shareholder. The tax on the dividend or buyback is much higher compared to the tax that they pay on the capital gains. So I really don't fully understand why this keeps coming back, because it's much better for the investor.
All right, well, that was a pretty interesting point. Capital gains tax is lower than sometimes the dividend tax and other measures that these IT firms use to return money to shareholders. On that note, let's slip into a quick break here. We'll be back shortly.
Welcome back. You're still watching Buy Now, Sell Now, and it's time to kick off our viewer queries for the day. Kunal and Sharmila both are with us. Let me read out the first query. It's come to us via Twitter. K.A. Ravindranath, he's bought 3,000 shares of Tata Motors DVR at 275. His time horizon is 3 years, and he wants our expert's opinion on whether he should continue to hold. Kunal, Tata Motors is a stock that you have also discussed quite a bit in detail in the recent past, and you have been very optimistic. What about Tata Motors DVR? Does the chart patterns show a similar trend there as well?
Yes, Karunya, I maintain my bullish stance on Tata Motors, but the only concern over here is that after 4 straight quarters of strong and I would say consistent price uptrend, it could be possible that the stock may take a bit of a pause. So, Tata Motors DVR, for example, from 30 odd rupees or 28 or 29 was the low for Tata Motors DVR. From there, the stock has tripled to almost 100 plus levels. So now I believe that the stock could probably be ripe for some sort of a consolidation. So I think it's a matter of time and patience over here. If the viewer has a time frame of 3 years plus, then I believe buying Tata Motors DVR or averaging Tata Motors DVR at levels of say closer to 80-85 could be a very good opportunity. So I would say that wait for a decent amount of correction into Tata Motors or Tata Motors DVR, and if the stock provides you a correction of say somewhere closer to 15-20 rupees on DVR, that could result to almost a 20% correction from current levels. I think that should be a good level where you should start averaging and try to bring your cost price as low as you can.
And Sharmila, how do you feel about Tata Motors DVR?
I think as Kunal was highlighting, I think the concern is that the buying price is really high. But overall, I'm positive on Tata Motors. I think that, the kind of numbers that they've delivered overseas is very heartening. And domestically too, we are seeing some sort of a resurgence in the kind of auto numbers we've seen over the past couple of months. So all things put together, it seems that it makes sense to stay invested in Tata Motors DVR. Also, I think another point in favor of the DVR is that typically DVR shares globally don't trade at such a big discount to the share price, and here the discount has opened up to more than 50%. So I think that's another sort of point in favor of DVR, that the price could play some kind of a catch-up. But all things said, I think the stock has rallied, so it will not really move up very fast. But since the time horizon is 3 years and the loss is very big at this point in time, it makes sense to hold and then probably wait for better levels and then really revisit the stock.
Okay, so near-term gains might be capped for Tata Motors DVR, but if your time horizon is very long, you might still make some decent money. Let's move on then. Suresh Gowda of Bangalore has written to us, and he'd like to know if SAIL is a good stock to enter, given that it just corrected 10% yesterday. I believe it's already made up some lost ground from that OFS price. But Kunal, I think you're quite upbeat on a SAIL, if I'm not mistaken. But on the chart, do you think we'll get back to where we were last week soon, or will the climb take a little more time?
I think the stock will take a lot of time to come back again. I think what has been happening for many of these PSU stocks is that the rally has been very fierce, and whenever these stocks have gone through a corrective phases, the correction tends to be more intense, and I think it takes a lot of time for the stock to complete that wave of correction. Now, if you look at SAIL charts and just compare the last 2-3 months, forget about the last 10 months odd, but even the last 2-3 months, the stock had risen up from 37, 38 levels to almost a 75. So a doubling of the stock price in a matter of 2 months, and then now you've seen finally a phase of correction. So I would sense that the correction could be a bit more steeper for SAIL. That could probably last for at least a couple of weeks, if not for a couple of months. And I would sense that the stock could probably come back to levels of 60 again. So 60 could be a good price where you could look to average again on SAIL.
Sharmila, you have on SAIL, it has seen a solid run up in the recent past, but yes, followed by a bit of a correction as well. Fundamentally, how is it poised to perform going forward? Is this a good stock to hold?
As I said earlier, I'm quite positive on metals as a space. But yes, I do agree that SAIL has really run up very fast, and there is an OFS going on at the moment. So I think it makes a lot of sense to let the OFS get over, because that will only mean added liquidity for the share, and that could drive the stock price lower, or it could at least act as an overhang. So you need to let those shares come into the market and see how the stock reacts. So yes, I like SAIL, but I would agree that you need to buy it at a slightly lower price, and you should wait for that correction to come in before you enter SAIL. As I said earlier, I think the stock that I prefer is GS.
Okay, all right, there you have it, the verdict on SAIL. Third query for the day, Jayant. Mohan writes to us, he's based in Kochi. He wants to invest in the auto space. He wants our experts to tell them which auto sector stocks look good at current valuations, and any stock he could also look at buying before the scrappage announcement is made. So definitely that is an impending trigger for the auto space, especially the OEMs. Let's talk about the technicals of several of these auto stocks, Kunal, especially OEM players. They've seen a very massive run up, and many of them made fresh highs just very recently. Tell us, which stocks do you think still have more legs, and which look attractive, and whose charts look more like they have more potential from here on?
Well, Karunya, I think frankly there are a lot of auto stocks which are looking fairly attractive. But the only catch over here is that whether the viewer over here just wants to play for this event, of budget or scrappage policy, etc., or whether the viewer is looking out for investing in auto stocks and then trying to hold on to the longer term chart potentials, because many of these stocks and the three names which I am particularly very bullish on, of course Tata Motors is one of them, but Maruti and Eicher Motors as well, they both look very attractive on the charts because these stocks have confirmed breakouts on the monthly and the quarterly time frame. So when you have such a kind of a longer term time frame breakouts, the stock enters into a multi-year upside. So the concern over here is that if it's very, very short term, specific to a certain event, then the chances are, or the probability maybe that the stocks may have factored in the kind of rises earlier to the expectations of the event. But if it's more towards long term, then I would suggest that look out for three stocks: Maruti, Eicher Motors, and Tata Motors. All of three of them have different kind of risk appetite as well, risk behavior as well. So I think as per your comfort level in terms of risk, you can look out for buying any of these auto stocks: Maruti, Eicher Motors, and Tata Motors.
All right, Kunal, sticking with some large cap names there. Sharmila, what about you? Where would you find decent value for the long term within auto?
I think more than value, I probably find more comfort in two-wheelers as a space, and within that space, I like TVS Motors. The kind of numbers that the monthly sales numbers that we saw for last month were very satisfying, and I think that that this two-wheeler sector overall, to my mind, looks better than four-wheelers going forward. So TVS Motors is the stock that I would recommend. I'm not really playing this as anything to do with the scrappage policy or anything, but just purely going by the kind of sales that I'm expecting going forward. And I think that two-wheelers are probably going to see a resurgence in this coming year. So I'm going with TVS.
Okay, thanks for that. And a big thank you to both our experts for joining us this morning. It was great to get perspective from you. Let's get on the BNSN stock cloud a bit late today, but nonetheless, we have 10 stocks that we'd like to flag off for you. While it comes up on your screens, of course, a couple of the stocks we've already discussed on the show are within the cloud. HCL Tech, for example, on the back of Q3 and the management commentary you just heard. SAIL on the back of the OFS. You know, we were just talking about SAIL, perhaps it'll correct, but today it's up 4.5%, nearly 70 rupees. Here I can see. So definitely recovering some of that lost ground we saw. We then also have this morning on the cloud Bharat Dynamics, which has signed a teaming agreement with Thales to manufacture Starstreak air defense systems in India. Bharti Airtel, because of the MSCI, obviously FPI limit being raised now and a lot of flows coming into that counter. Ahluwalia Contracts, a stock we don't talk about too much, but SPIMF has bought 26 lakh shares. Polymed, which is a medical devices company that's approved a QIP. Oil India, with CLSA upgrading them to from sell to outperform. And then ICICI Prudential with Jeffrey maintaining a buy, and they believe that ICICI Pru can benefit from a combination of stability in product mix going forward. I also think on this note right now, we're going to take a quick break. We'll be back shortly. Stay tuned.
Welcome back. You're still watching Buy Now, Sell Now on ET Now, and it's time to unveil the daily quiz questions answer. Well, we asked you this morning which of the following pharma players has seen the highest profit CAGR over the last 10 years. Time to bring on the answer. The options we gave you were Lupin, Cipla, Divi's Labs and Sun Pharma. The correct answer to that question is Divi's Labs. The champions for the quiz today are Mukesh Kumar, Balaji and Sunay. Congratulations, guys. And thank you for all our viewers for participating daily on the Twitter handle. And if you also want to join this quiz every morning, you can follow us on ET Now Live. And when we post the question, you can send us your answers in the comments section. Moving on to the ET Now Inside, Jayesh is standing by to give us a sense of December quarter shareholding changes. Jayesh.
Some interesting names that have popped up while looking at the quarterly shareholding changes as of 31st December 2020. Let me start off with the list where the FIs have increased their positions to the maximum extent. IRCTC tops the list with more than 8% holding as compared to less than 1% holding in the previous quarter. From the large cap space, you have ACC, and then you have the mid and the small cap space, which has been dominated by AFL India, CSB Bank, as well as L&T Finance Holdings, all of them having significant increase in their FII holding. As far as the decrease is concerned, you have a lot of mid-cap names featuring in this list. Birlasoft from the mid-cap IT space, J&K Bank, LIC Housing Finance, Tata Motors, DVR is the probably the only large cap to feature in this list, along with Oracle Financial Services. But it's where the DIs have increased their positions once again. IRCTC stands out over here. And then you have LIC Housing Finance, Birlasoft. So what the FIs have sold has been picked up by the domestic institutions, along with Coforge Limited as well as Century Plyboods. But if you look at the DII decrease, that has happened. There has been consistent selling that we have seen from the domestic institutions. A lot of notable names over here, starting off with the cement pack, ACC and Ambuja Cements. Then you have Hero MotoCorp, Affle India, along with eClerk Services and Escorts that also make it into this list. And then you have another mid-cap IT name, Mindtree, along with TVS Motors, that has also seen some shedding by the domestic institutions. As far as the promoter increase is concerned, you have Tata Motors DVR that has seen a 6% increase in its holding. Trident, along with IRB Infra and Brigade Enterprises, also there has been marginal upping of promoter stake. Where they have decreased the stake is, of course, IRCTC stands out over here. So what the promoters have in fact let go has been picked up by the domestic as well as the foreign institutions.
Okay, thanks for that, Jayesh. Another stock in focus is Tata Elxsi, and it's gained 20% over the last couple trading sessions. Obviously, this is on the back of a very strong show in Q3, which saw peak margins of 30%, 477 crore in revenue. It was definitely a beat on all counts. We caught up with the management earlier today. Let's listen in.
We've had a pretty satisfying quarter, and as I said in the presentation, right, it's not just one vertical or one geography that has really fired for us. Essentially, all the businesses that we are in actually grew significantly, and that was pretty satisfying. And I would want to assure you that this is not a flash in the pan, and this is something that we have been working, throughout the last, 4 quarters. Even when times were tough, we were pretty confident of the nature of our business and the customer connects that we've had, and in Q3 it all came together, right? So yeah, I'm pretty confident that we should continue on this growth path.
So I don't want to get this one wrong. Are you saying that the kind of sequential growth what you've reported for Q3, you could see the same kind of sequential growth for many quarters?
I wouldn't want to comment that or mislead your viewers, right? So definitely we're seeing a good traction. We're seeing good pipeline. We have made all the right investments in the sales team and the delivery capabilities. We are confident that we are on the right path.
In a bid to boost the real estate sector, state governments have cut real estate premiums. And given the triggers that have been in place for the entire real estate space, we spoke to Pirojsha Godrej, who is the executive chairman of Godrej Properties, to decode the impact of this move and the overall outlook for the sector. Listen in.
It's great to be with you. First of all, Happy New Year to you and all of your viewers. I do think that, as expected, finally the real estate cycle is starting to turn. It's important to keep in mind that it's not just COVID that created a problem for the sector, but really we've had a downturn now since about 2013. And this being a cyclical sector, you do typically have rather long periods of upswing and downswing. And I think we're now starting to come out of that negative period. We're seeing demand pick up. We're seeing inventory get absorbed. And I think what will actually surprise a lot of people, given the amount of commentary we've heard over the last few years of excess inventory, is that actually very little inventory has been planned over the last 2 or 3 years. So as demand continues to pick up and this current stock of inventory gets absorbed, I think you'll start seeing the next upcycle in the sector. So I think you're right. Hopefully the improvement we've seen over the last 6 months is a precursor to much stronger times ahead.
There are two ways to look at the real estate market. One, the entire market is growing and everyone is growing, a phenomenon what we saw between let's say 2003 to 2012 or 2005 to 2008, 15, 16. Second is that established big players, they are growing, and smaller players, they are shrinking. What scenario do you foresee in coming years?
No, I think, the consolidation that's been happening in the real estate sector, I think will continue to happen and has a long way to go. Because if you think about it, it's a sector, it's a very large sector, but exceptionally fragmented.
Okay, completely out of time here on Buy Now, Sell Now. Thanks so much for watching. Stay tuned to ET Now and have a great weekend.